Hey everyone, this is Kirti and I welcome you all to Ticker by Finology. So after so many months, I'm back with one IPO analysis video on GPT Healthcare. And from now onwards, I'll be making IPO videos here only. So if you haven't subscribed to this channel, do it right now and hit the bell icon so that you get all the important updates and videos related to IPO analysis. And also, if you are a person who have subscribed to this channel from day one, thank you so much for your love and support. I'm here to make your financial journey easy and understandable. So moving on to the IPO analysis of GPT Healthcare, we'll be talking about a lot of factors like company's business model, its strengths, its weaknesses, risk associated with the company, its financials, and lastly, we'll discuss IPO details and its objective. Also, if you watch the full video, you'll be able to make a decision on whether you should apply for this IPO or not. So let's start by understanding its business model. GPT Healthcare is one of the key regional corporate healthcare companies in Eastern India in terms of number of beds and hospitals as of financial year 23. The main key focus area are secondary and tertiary care. At present, they operate 4 multi-speciality hospitals located in Damdam, Salt Lake, Havda in West Bengal and Agartala in Tripura with total capacity of 561 beds. These hospitals runs under the brand name of ILS. This table shows the bed capacity of their hospitals inclusive of beds across ICUs and HDUs. We normally have heard about ICUs, but maybe you haven't heard about HDUs, which are high dependency units. ICU provides critical care for patients with life-threatening conditions, whereas HDUs offer a level of care between general ward and ICU for patients requiring close monitoring and advanced medical support, but who are not as critically ill. So you can see the table that shows how many ICUs and HDUs these 4 hospitals situated in Salt Lake, Agartala, Havda and Damdam has. As we discussed, they are strategically located in the area of Kolkata, Havda and other cities so that they can provide accessible healthcare to the patients. The company's capital cost per bed is relatively low compared to the industry average, making their services more affordable. Now that we have understood the business model of the company, let's move to the strengths of the company. The first strength I see is that they have a strong foothold in under-penetrated and densely populated areas in Eastern India. To prove this statement, let's understand the distribution of doctor per patient in different parts of the country. According to one of the CRISIL report released in year 2020, Eastern India has the concentration of 5 doctors per 10,000 individuals and 12.7 nurses per 10,000 individuals, which is the lowest concentration of doctors and nurses of all regions in India. If we compare this data with the other parts, West India has 11.5 doctors and 27.5 nurses per 10,000 individuals, while South India has 17.3 doctors and 56.5 nurses for every 10,000 individuals. Looking at this data, we can see that Eastern India has the most poor distribution of doctor and nurses for individuals, and considering that GPT Healthcare is one of the key regional corporate healthcare companies in that area. To support this statement, let me show you data of number of hospitals GPT has compared to its peers in this region. This data is according to financial year 23, where the number of hospitals of different companies are mentioned. If we talk about the Medica Hospital, it has maximum number of branches of 5 hospitals. Next to AMRI hospitals, then comes GPT Healthcare, which is branded as ILS hospitals with 4 branches. Then talking about Apollo Hospitals, Neotia Healthcare and Peerless Hospitex Hospital and Research Center has 1 hospital each. You can also look at the number of beds these hospitals have. AMRI Hospital stands first with 1225 beds, then Medica Hospitals with 970 beds, then Apollo Hospitals with 700 beds and ILS with 561 beds, and then Peerless Hospitals with 400 beds, Neotia Hospital with 250 beds. So GPT Healthcare has a decent number of hospitals and bed compared to their peer companies. Now, if we talk about their second strength, they have a well-diversified specialty mix and location mix. GPT Healthcare serves Eastern India with over 35 specialties from primary to tertiary care, including various healthcare services such as internal medicine, nephrology, surgery, gynecology, critical care, orthopedic, cardiology, neurology and pediatrics, positions them as a one-stop destination for patients' needs in various micro markets. This diversified services portfolio ensures multiple revenue streams, bolstering their multi-speciality healthcare platform. We can see the revenue derived derived from each segment stated as a percentage of total revenue. You can pause this video for a bit and have a look at this revenue mix among the different services they offer. Now, this point also brings us to the risk associated with the company. The company says that they have a good revenue mix, but it is only amongst their top 10 specialties. As you can see in this table, it reflects their revenue from operations generated from the specialty department as a percentage of total revenue from operations. So we can see that for financial year 23, 89% of the revenue came from these 10 specialties and rest came from other things. And this dependency has increased further in 6 months period ending September 2023, which is 90.44%. The next big risk associated with this company is the revenue concentration amongst the hospitals situated in West Bengal. 70% of their revenue is derived from the hospitals which are located in West Bengal. A substantial portion of patient base and revenue is derived from 3 out of their 4 hospitals which are situated in Salt Lake, Howrah and Dum Dum, and all this is also located in West Bengal. As you can see in this table, for financial year 23, the company's revenue from operations was 3600 millions, out of which 2500 millions was generated from the hospitals of West Bengal. Means 70% of the revenue was derived from the hospitals which are situated in West Bengal, which shows a huge revenue concentration. You can also see the similar data for company's total inpatient and outpatient volume from all the hospitals compared to the West Bengal hospitals from this table. Coming to the next risk, one of their promoter group member, Ishwari Prasad Tantia, was published in the list of willful defaulters by certain financial institutions in the list issued by RBI. He hasn't paid back the loan of 747 crores. So this might impact the reputation and goodwill of the company as well. Even we can count fourth risk from this point only. Hospitals and their reputations and goodwill goes hand in hand. These type of businesses demand high dependency on the strength of their brand recognitions. One negative marketing can ruin their reputation in the market, affecting their operations and revenue. Remember one of the movies of Akshay Kumar, Gabbar, which highlighted the fraudulent activities in hospitals. So if this kind of activities gets associated with any hospital, the reputation is ruined and it affects the revenues of the company. The fifth risk is the bed occupancy rate of this company is lower when compared to its peers. So first let's understand what is bed occupancy rate and why is it important in hospital companies to see this metric. The bed occupancy rate is the metric used to gauge the utilization of hospital resources, especially the percentage of beds occupied over a period of time. A higher occupancy rate suggests the efficient use of resources, while the lower occupancy rate signifies that the resources are not fully utilized and lost revenue opportunities. So if we talk about the GPT Healthcare, you can see that the bed occupancy rate compared to its peers through this table. If we talk about financial year 23, GPT's bed occupancy rate was around 58.92%, whereas its peer Global Health was also maintaining 58% occupancy. But KIMS and Jupiter Life bed occupancy rate was 69% and 62% respectively. So compared to its listed peers, GPT is lagging behind in this metric. Now this point brings us to the capital expenditure of the company. If the company we are analyzing requires huge investment in infrastructure and other resources, it's important to assess the capital expenditure of the company. So let's look at the figures of it. Company generates most of the revenue from inpatient and beds are also occupied by these inpatients only. So if we see the inpatient revenue of the company for financial year 23, the revenue generated is 2900 million, which has increased over time from 2021 to 2023. Even you can see the average revenue generated per inpatient, and that is around 1,03,000 for financial year 23. Now looking at the history of occupancy rate from financial year 21 to 23, this has also increased from 48% in financial year 21 to 58% in financial year 23. Now looking at the figures of investments that is done to increase the bed capacity, modernization of infrastructure and introduce new technology, we can see that investment has also increased from 59 million in financial year 21 to 107 million in financial year 23. And if we look at the investment done to add new bed capacity and modernization as a percentage of our total income, it has also risen from 2.40% to 2.93% in financial year 23. So these were some of the risks associated with the company. Now let's move on to the financials of the company. We'll look at some of the generic ratios first, and then we'll move on to some specific ratios that has to be taken care of while analyzing any hospital company. So starting with the revenues, EBITDA and PAT. If we talk about the revenues, it has grown from 242 crores in financial year 21 to 361 crores in financial year 23. Talking about the EBITDA, it has grown from 55 crores in financial year 21 to 80 crores in financial year 23. However, EBITDA margin has slightly decreased from 22% in financial year 21 to 21% in financial year 23. Now, looking at the PAT, it has increased from 21 crores in financial year 21 to 39 crores in financial year 23. And PAT margin has seen a slight increase from 8.48% to 10.6% in financial year 23. Talking about ROE and ROCE, both has increased from financial year 21 to 23, and you can see the growth in the figures. Now, because this company does a lot of capital expenditure in order to increase capacity and also develops infrastructure, so it's natural for them to take a debt in order to complete all these obligations. So if we see debt to equity ratio, it has decreased from 0.92 in financial year 21 to 0.93 in financial year 23, and the debt never got increased above 1, which shows us good sign as they are managing their debt effectively. So these were some of the generic ratios which you should look at before analyzing any company. Now let's move on to some specific ratios which you should consider while analyzing hospital companies. The first one is total bed capacity, which we have already discussed that the company currently has 561 beds and they have increased this number from 556 beds. Coming to the most important metric, that is ARPOB, which stands for average revenue per operating bed. This is calculated as hospital revenue divided by total length of stay days. This metric reflects the efficiency and productivity of each bed in generating revenue for the hospital. A higher revenue per operating bed indicates better utilization of resources and higher profitability, while lower figure may suggest underutilization or inefficiency in revenue generation. If we look at the ARPOB figures, as the number of beds have increased, ARPOB has also increased from 24,681 in financial year 21 to 29,671 in financial year 23, which shows there is an increase in per occupied bed. Next important metric is ALOS, which means average length of stay, calculated as total length of stay days for a year divided by inpatient volume for such year or period. A lower ALOS typically indicate efficient use of resources and higher bed turnover, contributing to increased revenue and reduced cost. A higher ALOS may suggest inefficiencies in patient care and resource allocation, potentially leading to higher cost and lower patient satisfaction. If we look at ALOS figures, it has marginally decreased from 5.56 days in financial year 21 to 4.22 days in financial year 23. Now let's quickly take a look at peer comparison as well. Global Health Limited has the highest revenue amongst all with 2600 crores of revenue in financial year 23, and GPT has the lowest revenue of 361 crores. Talking about EBITDA, Global Health has the highest EBITDA of 677 crores and GPT Healthcare has the lowest EBITDA. When you compare the other figures of PAT, ARPOB, bed occupancy and ALOS days, you will find that GPT ranks the lowest in every metric, which means that compared to peers, GPT's performance is not that great. So this was about the company's business model, its strengths, weaknesses, financials and everything. Now let's move on to the IPO details and IPO objectives. So you will get all the details related to IPO on ticker.finology.in. So let's go there and open the IPO page. Here you will have to click to the GPT Healthcare. The IPO has already opened from 22nd of Feb and will close on 26th of Feb. The price band is 177 to 186 rupees and the issue size is 525 crores. The allotment date is 27th February. Refund will be initiated on 28th February. Now let's look at the objective of the IPO. Issue size is 525 crores, out of which the fresh issue is of 40 crores and offer for sale is of 485 crores. With fresh issue, the company will be repaying the outstanding borrowings from the banks and financial institutions. So I hope that you have got all the information related to this IPO on this video, which will help you make a decision on whether you should apply for this IPO or not. Also, do let us know in the comments if you are applying for this IPO. Thank you for watching this video. Keep learning, keep growing. Bye-bye.